Today, Fiverr's earning just came out and it's looking really positive. Year-on-year growth for 2020 was 77%. So this Q4 2021 result was staggeringly impressive. However, the future forecast came in a bit under par of under 50% growth for 2021. Is it a concern? Stick with me on this video and I will showcase what I found and my analysis. Fiverr in this chapter, I will divide into 5 key points. It will be about the new news, which is very important, the earnings, what's been covered, the future roadmap, yes, a lot of new information, the valuation, and finally, my final thoughts on how Fiverr investors should be thinking. So as always, we always have to start with the new news. First one is they've acquired working, not working, basically a creative company out there. They've acquired it fully 100% to increase the database for creative freelancer. And the second key point is they are looking to develop new platform to help corporate brands and agencies. So they're just not a $5 website to buy a gig. They're looking to expand their communication, branding, and advertising business. Keep that in mind because it's important for point number 4 on the roadmap. And finally, the third key point is they have finally secured offer cards as the future chief financial officer. This is key to bring somebody so experienced in because there's 2 things that's on the radar for Fiverr: more future acquisition and more money raising to expand the business because they're no longer just a freelance gig economy. And now for the meat of the chapter here, it's all about the earnings. As it stands, looking at it, they've hit target. Straight on target, well done, 0.12 EPS and final growth 77% year on year, around about 89% for the 4th quarter alone. So it's really good. As you can see here on the net income increased to $8 million. It's like, what is happening here? Shouldn't you be breaking even? Remember the Super Bowl ad by Fiverr. They spent about $8 million on it to increase the branding awareness in the USA, and that's where they spent. If they didn't spend that money, the EPS would be higher, there'd be more profit and also more injected in. But they decided to invest in branding. Also, key numbers, the 3 key numbers I want to show is 3.4 million active buyers, and the buyer spend per person is about $205 spent per person across this 3.4 million. Take-home rate is still 27.1 for this freelancer, which is pretty good. They're trying to keep it consistent, trying to keep the freelance happy. I just want to quickly cover about the future earnings forecast of 46 to 50% revenue. Is this a real concern? When I first saw it, I thought, oh my goodness, what is happening here? But think about it. When I do a look back about 4 quarters ago, back in the same time in 2020, the future forecast for the year 2020 back then was 35 to 38%. And bam, they broke it almost twice to 77%. So now they've been conservative again, but this time slightly higher, 50%. Will they beat 77? Will they go 100? We don't know. But I'm just sitting here thinking it's a cultural differences. You know, folks in Israel, they're very conservative with their targets. They always pull it back, but they want to overachieve. So it's just a cultural difference is the way the Americans forecast. So they're hitting at 40%, trying to be realistic with their growth, trying to be realistic with why the company's standing at 2021 just now. What is the roadmap for Fiverr? As it stands, everybody, if I ask you what Fiverr is, it's a freelance gig economy. You can buy a logo, you can buy a song, you can buy a writer from Fiverr. That's what Fiverr is. But think about it. If they keep continuing doing this, how far will they grow? How far will they be? The only way to get big clients is business to business. So you can see, as we said just now, $205 spent per client. They're looking for the bigger fish in the ocean here. They're looking for the whale. The whale is only companies, high corporate companies are willing to pay bigger lump sum of money to offload the advertising, to offload their the writer division, to offload the accounting division off the freelance. That's where the bigger chunk of the pie is, because companies are trying to cut costs, trying to get smaller, and they want to throw overhead expenses. They do want overhead room for employees. So they are not just going out as a gig economy now. They are going to communication, media, marketing, and a creative agency. This is where they are going. And instead of trying to capture every great creative freelancer out there, they're trying to build a company to create high value work here. I'll be more worried if they're just sticking with a Fiverr gig economy, increasing the rate, increasing the price, increasing products, expanding. But no, they are expanding geographically as well as expanding the business and evolving the way how every large corporation, medium-sized businesses, small businesses are evolving. All right, now let's speak about valuation, technical analysis, all clumped to one. But most importantly, what you want to hear is about a buy trigger as it stands after the earnings of Q4 2020. So for me, I will call a simple buy trigger of the first point line of my top trend line of around about 271 as it stands today, and the bottom trend line, which is also close to the 50-day moving average of 234. Okay, that's Fiverr. So when you see them drop, please don't even ask me. Don't think, buy a piece of Fiverr. It's a great company, it's a great stock. But the other thing that I would like to add as well, it's sitting at $300 per share just now. It could drop 290 for the next few weeks. But Alex, what if it doesn't fall? Will I miss this trend? I would say yes. If you don't buy it, if you miss it, yes, you will fall. So all I want to tell you is stop looking at the price target, stop looking at the cost price action, technical analysis. If you are like me, looking at the business, looking at a roadmap future for Fiverr, buy some now and try to cost average down. If you think Fiverr will be a future business that covers just gig economy to help people from home working get a job, people with skills. And number two, if you believe that Fiverr is a company that's going to be communication, marketing, they're going to be a branding type company for corporate brands, then get Fiverr. And number three, if you think Fiverr's vision for the future will help the changing technological world, then buy Fiverr. Buy it now and buy on the dip. Dollar cost average, don't go all in, take your step down, order the volume, get it built up. The reason why I'm saying this as my final thoughts, okay, as an investor who's been in the game for 10 years, all I say is I've missed a lot of stocks. I've missed the likes of Shopify, I missed the likes of Netflix. I missed it because I'm basing my valuation too low. I missed the train, but other investors have seen the future value ahead of me. So I do not want this to be another Shopify incident where I missed it at 100, I missed it at 2, I missed it at 3, and now it's $1,500 stock. It's literally almost 10 to 15x. This is the risk that you're willing to take to pay for future 2 years value, then take it. But if you think that there's time for it to fall, then wait. Buy trigger, as I repeat, 234, 271 as of today, but you still keep creeping up. Follow the trend line as I've shown on the chart here. I will share the same chart on the Discord as well for you to keep a copy for yourself, or you can plot it yourself. So this is really me, my views on my personal terms. Am I buying Fiverr? Am I selling? No, I'm not selling Fiverr. I'm buying, I'm accumulating. For every single dip that I see, I will buy it for both my eToro, for both my Trading 212, for both my FU portfolio, and that's where I am. So this is me. I've spoken a lot towards the end, but I just want to present that to you and just be plain up honest to give you a decision on how would you want to play this Fiverr strategically. Okay, so for me, I'm investing in the business. For you, you make a decision yourself, and hopefully you make a good one. All right, thank you very much. I hope you've enjoyed that video.
Please like the video and please subscribe to the channel.
And hope to see you soon. Bye.
Bye.